Ladies and gentlemen, wow, what an exciting, exhilarating 24 hours on Bitcoin, and for some people, devastating 24 hours on Bitcoin. I mean, we saw probably the biggest drop, the largest liquidations, $1 billion in liquidations that we've seen in 24 hours for many, many months. The biggest drop in one single daily candle for over, the entirety of 2023 on Bitcoin. So big stuff, big drop to the downside. Technically, I was wrong, right? I thought we were going to go upwards. I said about a 75% chance of upwards price action, 25% chance of downwards price action. Unfortunately, probabilities don't always play out. We saw a downwards price action. I was incorrect about the direction. I did say, however, that you shouldn't be buying within that range. And so realistically, you shouldn't have lost any money there. But I also did say Bitcoin was very fragile. And if we did drop down, we'd be retesting that 24.5K to 25.2K region. I was correct about that. We did see a clean retest of that region. But obviously, huge drop. And that's really damaged the Bitcoin macro structure. And Bitcoin really now is in a position in which it's trying to salvage a bit of what it's lost. And it's lost quite a lot. Gaussian channel needs to be salvaged. Bull market support band needs to be salvaged. Monthly candle needs to be salvaged. Quite a lot to look at today, and looking for the key levels, the crucial levels on Bitcoin, whether this macro damage will actually flip the macro trend on Bitcoin, when the macro trend will flip, if that does occur in terms of price points. Lots to dive into today. So guys, without further ado, let's get into it. Okay, ladies and gentlemen, obviously we've seen a massive move to the downside. For that reason, I could make probably a 40-50 minute video if I really wanted to. I'm not going to do that. I'm going to try and keep it as short as I possibly can, try and give you all the information you absolutely need to know in this video. So know that everything in this video is something you need to know, and for that reason, you shouldn't be skipping through it. Going to be looking at daily chart, 15-minute chart, daily chart from a different perspective, weekly chart, monthly chart, weekly chart from the range bound perspective, and then S&P 500 is quite important right now as well after a long period of not being important. We're going to be looking at Bitcoin index, which is the 4-year cycle theory, and then finally Bitcoin liquidations we've seen over the last 24 hours, which is very, very important as well. Before we get into any of that, check out the Bitget Exchange. Sign up using my referral link in the description below for a 15% trading fee discount. You can sign up from the United States of America, even though the country is not listed. You can simply click Other as country of origin and sign up with a VPN, and you'll be able to use the exchange non-KYC. For everyone else, you can non-KYC if you want to, but you can use your exchange from your country of origin if you want to as well, and KYC. So just for referral links in the description below, 15% trading fee discount there. Guys, let's get into the video. Where to start today? Honestly, I think we'll start with liquidations, all right, just so we can get an idea of how big this move was. Now, I want to say first and foremost, okay, as I said in the introduction, I was saying to you guys that this move was most likely to go upwards. I was wrong in that regard. We didn't see an upwards move. I was saying, my quotation directly from all of my previous videos said that we'd see a 70 to 75% chance of an upwards move, so about 3/4 likely. Obviously, we saw the unlikely scenario take place, and I stand by what I said, okay? And it's very important that you understand this. In TA, you can only predict what is most likely. You cannot predict uncertainties. And I saw what we were in. We saw it in an uptrending structure. We've seen uptrending structures like this in previous bear markets. They've lasted years on all the previous occasions. We also have, had major support on the bottom of that uptrend structure. 50 SMA, 200-week SMA, bull market support band, Bollinger Bands, Gaussian channel. You can go on and on. A POC on the volume profile. All that support is there. It would simply be irrational for me as an analyst to say that a downside move was more likely at that point in time. I stand by what I said. An upside move was more likely. Unfortunately, what you want and what you see as more likely is not always correct, and sometimes you see the opposite play out. That's simple mathematics. So it's worth noting that we have seen a downside move here. And I said that if we would see a downside move, Bitcoin would be very fragile and it would happen very quickly. And guess what? I was correct in that regard. It did happen certainly very quickly. In fact, we've seen the largest red candle downwards we've seen in a long period of time, for the entirety of 2023, I should say. So Bitcoin was always slightly bullish, but very fragile. The fragile part was certainly true. We dropped downwards massively, saw a big move. Luckily as well, if you were listening to what I was saying during this range, I also said multiple times, in fact in every video, that you should not be buying during this range. Although I was leaning slightly bullish, I was recognizing the fact that Bitcoin was fragile, and I said you should not be buying in this range. You should be waiting for a break of 32K before buying. So even if you listened to me, you wouldn't have lost money there, because I was not recommending buying in that range, and I obviously was recommending de-risking on downside break, which is we saw, and we had time to de-risk there. So look, okay. How do we get into this video? We can start by looking at liquidations. Bitcoin has seen and the entire cryptocurrency market, I should say, has seen in 24 hours, actually probably around 36 hours, $1 billion in long liquidations. The longs have been absolutely flushed, okay? The longs have been flushed. Gone. $1 billion of liquidations is insane. You don't see that very often at all. If we're looking at the last 3 months of history in liquidations, we haven't even got close to that in the past. I mean, the most we've had is, was back here in June, and that was 300. We've seen 3x what we saw in June. So massive amount of liquidations there, which means that people got flushed out of the market very quickly. And you can see that by the fact that we had a huge move to the downside. Big wick as well, jumped right off that support zone. So now I want to start by looking into the ranges we are at in Bitcoin. What are the Bitcoin ranges? And this is a very important part of the video, and this is something I've been emphasizing for a long period of time. Although we have dropped downwards massively, and I'm not going to sit here and say we're bullish, we're not, but although we have dropped downwards massively, we haven't lost the range yet, okay? Because if you look at what Bitcoin is doing right now, it has a range. The bottom of the range is 24.5K, set by weekly candles back in February and back in August last year, okay? It was retested over here in June this year, and we've come down and retested it once more, and we've retested it from a weekly chart perspective, hitting that weekly candle close zone. So right now, actually what we've seen, okay, and I want to make this very clear, we haven't seen a drop below the range yet. So Bitcoin has not flipped into a macro downwards trend yet, okay? If we drop below this range, this green range, we drop below, we see a weekly candle close below 24.5K, that's when we enter a weekly downwards trend, because that's when we'll see an actual lower low placed, and that's when we'll see most likely higher lows, lower highs placed via rejections off the red zone and go downwards further like that. Until we drop below 24.5K on the weekly chart, Bitcoin is not in a weekly downwards trend. I still stand by what I've been saying for a long period of time. 32K and 24.5K are still the most important zones you can watch on Bitcoin. And I've actually simplified this many times in past videos. If you wanted to look at 2 price levels and only 2 price levels on Bitcoin, those are the 2 price levels you'd look at. You look at 32K, you look at 24.5K. Nothing else actually really matters too much from a macro perspective. The key word there is macro perspective. Now, unfortunately for Bitcoin, it's not a very good look, right, to break above a range, resistance support flip, go up again, double top and come down back to the bottom of the range. It's not a good look. And generally speaking, when you see something like that, you see a breakdown. So I'm not particularly confident in Bitcoin in that regard as of this point in time. I also have been looking quite extensively at the monthly chart, and I'm seeing some pretty bad signs here. I'm pretty disappointed in what the monthly chart has been doing, actually. Now, you guys know at this point, and if you don't know, well, I'm telling you right now, we have a cyclical trend on the monthly chart in which we see basically a red zone hold for support during the bull market. We drop below, we bottom out on the yellow zone. That's happened on 3 occasions, okay? So we bottom out on the yellow zone in this cycle again, or roughly on the yellow zone in this cycle again. We came back up and we broke the red zone, the red line at 29.2K for resistance. We broke it. We actually found it for resistance briefly, went downwards, then broke above it, then flipped it and closed right on top of it. And now this monthly candle's in danger zone, right? Because it's actually opened below it, or opened right on top of it, I should say. And we're starting to dig deeper below that support zone. We do not want to be seeing a monthly candle close below 29.2K. That will be a sign of a pure trend exhaustion, because after breaking it and holding it for 1 candle, we drop down again. That's pure trend exhaustion right there. So I want to say, I know 14 days is a long time away. I know we've seen massive moves in short term. I know that you're not really thinking 14 days in the future right now. You're probably thinking about tomorrow, given the volatility. But I want to quickly just inform you that the monthly chart right now is quite important. In 14 days, if we fail to hold 29.2K, that's going to be very bad for Bitcoin macro. And that's when we're going to really start predicting drops below these major ranges, I think. So 14 days from now, we'll have a monthly candle close. That's quite important. Now we can dig into some of the shorter term stuff. I think we'll work our way backwards, right? So now we'll go into something like the weekly chart. The problem with this drop, okay, is not the fact that Bitcoin's gone down. It doesn't really matter if Bitcoin's gone down. The problem with this drop is that it threatens a lot of macro structures. Okay, that's the problem. So, for example, I know we're going to be looking at bull market support band on daily chart perspective again in a second here. And as I said, we're going to be working from long time frame to short time frame. But bull market support band is something that's very important for Bitcoin. It's always been very important for Bitcoin. Okay, look historically, if you're looking at something like 2016, after the bear market in 2016, what we actually did is we held the bull market support band the entire way to the top. I'm talking the entire way upwards. Look at this. It held like a rock the entire way upwards until the bull market top, and then we dropped below it. And that was in 2018. We held the bull market support band for a period of over 2 years, right? So, 2016, 2017, 2018, 2019 wasn't the same story. I mean, 2019, 2020 wasn't the same story. We held it for a decent period of time. We dropped below it during the bear market, and then we kind of tossed around above it. And finally, when it came back to bull market territory, we held it for a long period of time until we saw basically the vast majority of the move in the bull market. The point is, though, right, and during the bear market, we had the same story, right? 2022 bear market, what do? Well, we went downwards, and the first thing we did is saw a resistance support flip off the bull market support band and drop down further. Okay, saw a similar story over here and held it for resistance all the way until the bottom. The fact of the matter is, the bull market support band, like it or not, it's a very important thing for Bitcoin. It's something you want to hold. And look, right now we haven't closed below it, and that's something to be very, very, concise and very, very informed on. We haven't closed below the bull market support band yet. It is very important that Bitcoin does not do that. Closing below the bull market support band or closing above the bull market support band very rarely leads to fake outs. We had a fake out over here. That was about it. Okay, you don't really see fake outs below bull market support band. You see wicks, okay, but if you close a candle close below it, you're very likely to go down for a very long period of time, or at least a sizable period of time. I mean, at least a few months, right? So this is why it's very important that Bitcoin holds this level right now. You might know about the bull market support band from someone like Benjamin Cohen, but now I'm telling you about it. I've been speaking about it for just as long as him. The fact of the matter is, okay, the bull market support band is currently sitting at 27.8k. If the weekly candle in 3 days closes below 27.8k, we lose the bull market support band, and that is a terrible, terrible thing to do. At the same time as this, okay, and this is why it's very important we close above 27.8k, we have the Gaussian channel. Now, what you'll notice is that the Gaussian channel's top line is also sitting at around 27.8k, just above it slightly at 28k. Okay, and this is why I'm saying we need to close the weekly candle above 27.8k or 28. I'm just going to say 28k for the sake of argument. Because if we close the weekly candle above 28k, we get back above the Gaussian channel and we get back above the bull market support band. That's very important because we never really close within the Gaussian channel unless we move through it. This is what I've discussed a lot of times in the past, and this is actually one of the reasons why I was slightly more bullish on Bitcoin, right? Because, look, when we enter the Gaussian channel, we move through it, right? We entered it there, we move all the way through. We see a big move all the way through, all the way through, all the way through, right? When we enter it, we move through it massively. All the way through again, all the way through again. Even during COVID, we moved through it. The fact of the matter is we moved through this Gaussian channel and we saw basically no upside price action. If the historical trend, which has lasted for the entirety of Bitcoin's price action every single time it's happened ever on Bitcoin, over 9 times now, we should be moving through this Gaussian channel and further to the upside. So that's one of the reasons as well why I was bullish. I think that's a very justifiable reason, right? We have a trend with Gaussian channel that's never ever been broken. And right now, if we close within the Gaussian channel, I'm not going to say it's going to be broken yet just by closing within it, but it certainly would be weakened. We want to be seeing a close on Bitcoin on the weekly candle in 3 days above 27.8k, preferably above 28k, to get above the bull market support band and get above the Gaussian channel so those trends do not break. It is incredibly important that we do that. Now we can move into something like daily chart, 15-minute chart, etc. And we can try and say, well, what are the chances we do that, right? Because we have to get above, basically, I'm going to draw the pink line on the screen now, 27.8k at a minimum. And we'll draw a pink line. That's what we need to get above in the next 3 days, that pink line there. What are the chances we do that? Well, unfortunately for Bitcoin, I mean, look, it's very difficult to say because we've lost everything, all right, on the daily chart. I mean, really, we're holding 24.5k. With that green box, that's really the major macro level. But in terms of everything else, I mean, you can just look at the chart here. Look at the yellow lines on the screen. What do we have on Bitcoin? I'm going to make these lines dashed so we can ignore them for just a second, and I'll bring them back in just a second here. But what do we have? Well, here's another reason why we were slightly bullish. And all these reasons, and I'm telling you these reasons because you need to understand that probabilities exist, and sometimes the unlikely probability can occur. We had a descending wedge on Bitcoin. That's a bullish structure. It would be ridiculous to be bearish within a bullish structure. We were bullish within that structure. We weren't recommending buying, though. It's very important. But that's a descending wedge formation, just like this was a descending wedge formation. They generally break to the upside. Unfortunately, probabilities don't always play out, and we broke to the downside. So we broke down from a formation there. I'm going to leave the lines of this descending wedge in because we might actually come back up and retest them for resistance at some point. I'm going to bring these uptrending lines back thicker so you can see what I'm looking at here. These ones are important to look at now. So if we broke down from the wedge, we always said that we had a chance of capturing support on some of these yellow lines. Unfortunately, we didn't. We simply didn't. We went right through them. Both of these yellow lines, whether it be uptrending from December and uptrending from March, we went right through those lines, dropped straight through them on one swift candle. And so that's very bearish as well. But as I said, I'm going to leave the lines in there in case we find them for resistance. And we can zoom in 15-minute chart. We can say that we're already finding some for resistance. Unfortunately, we're finding the 4 bearish resistance, right? Resistance support flip. So that's bad on short term. Not very good signs on the short term. Not very good signs on the daily chart. Not very good signs on really much right now for Bitcoin, to be honest with you. We've dropped below basically all of the horizontal support that we have within this range until 24k, roughly. I mean, there is vague support around 26.2-ish, 26.4, 26.2. There's vague support there, but it's not, particularly strong. In fact, I'll draw it in now just so we can know where it is. That's where the support is, roughly over there. And yet, okay, cool, we've held that in a daily candle, but what about everything we've lost, right? So Bitcoin's moved downwards very rapidly. 15-minute chart's not looking too good, but obviously, short-term TA with moves like this are very, very hard to analyze. And obviously, the chart we were looking at originally to determine the fact we're going to be seeing a move in August has broken down as well. Now, I obviously, guys know, and this is something I was pointing out for a long period of time, I was saying we're going to be seeing a move within August, and we've seen that move now, right? And whether this move is just the start, or whether it's over, or whether it was a liquidity grab and we reverse, which is a possibility, of course. The fact of the matter is we've seen the August move. We saw huge Bollinger Band compression on 3-day chart. Okay, massive compression, biggest compression we saw since January. We moved downwards because of that, and we moved downwards below this uptrending logarithmic line, which was the support line. And we saw as we broke that line, we went downwards rapidly. So the logarithmic line was correct; it was true, and the fact that we broke it down. And the fact that we saw a rapid breakdown on Bitcoin after breaking that line means the line was valid. Unfortunately, that's the direction of the August move that this triangle pattern has chose. So I think that yes, there is a possibility that this entire move was a liquidity grab, particularly the last leg of this move. Yes, there is a possibility to go upwards from here, but I don't really like the look of the Bitcoin structure right now. I think that even if it was a liquidity grab, I don't think it's one of those, generally speaking, right? When you see a liquidity grab, what you see is a dip into support and then straight back upwards. Unfortunately, we've failed to go straight back upwards. We're just like a third of the way up, and we're sitting at 26k. So it really is important, and I think this is really the closing note I'm going to give you in this video. In fact, I'll speak about one more chart, but this is, because I need to speak about S&P 500, but this is something that's important, I should say. We need to be seeing a weekly candle above, as I said, 28k, 27.8k, somewhere in that region, to salvage something on Bitcoin. Right now, everything is being lost. We need to salvage something, and 27.8k or 28k would salvage that. But I want to make myself very clear as well. I do not think that Bitcoin is by any means confirmed to be in a bear market at this point in time, because we haven't seen the macro trend flip downwards. Once we see the macro trend flips downwards, right, I think the chart just literally disappeared. But I think you get the point of what I was saying before. Once we see the macro trend flip downwards, once we see a loss of this green box at 24.5k, that's when we can start being more macro bearish. Right now, we are still in the same region, and so there's no actual TA justification to be bearish on a macro scale. Now, that might sound ridiculous to some people, but that's how TA works, right? You can't just say bearish, bullish every 2 seconds. That's how you end up being a flip-flopper. You need to be consistent with your TA logic. My TA logic is that I trade ranges. I understand how ranges work. I understand that right now we haven't put in a macro lower low, and therefore there's no chance we can possibly even be in a macro downtrend by any condition other than speculation, pure speculation. Right now, there is no charting evidence to suggest that we're in a macro downtrend. I'm not saying that won't happen. I think it looks more likely to happen than it was yesterday. Let me put it that way. But I'm saying right now it hasn't happened, and so we need to be aware of that as well. So, I want to talk about S&P as well, because I think the S&P 500 is an interesting topic to talk about right now. Obviously, we saw for a very long period of time, in fact, over a year, decreasing correlations between Bitcoin and the S&P 500, and that led to me not really caring about the charts, and that was justified, by the way, because I trust charts, and the charts were saying that it didn't matter at that point. Unfortunately, now I think we've seen such a dramatic move downwards in the S&P 500 in such a short period of time that the correlation has kind of flipped back. I think there is a correlation now between S&P 500 and Bitcoin. I think it has come back to a certain extent. And we've seen a massive downwards move on S&P, and we've hence, it's not like let me explain something. It's not like the S&P 500 has dragged Bitcoin downwards. They happen simultaneously. They happen side by side. It's not like one of them controls the other. It's that financial markets in general have the same systemic risk as one another, and therefore when the systemic risk changes, both the charts move down. It's not like they drag each other down or anything like that. Now, the reason why I was happy about Bitcoin for a long period of time is because it had distanced itself from a systemic risk that the traditional markets face, therefore created its own kind of asset class, and therefore created its own kind of risk basis, I suppose. So things that affected the traditional markets for a period of time didn't affect Bitcoin, and that gave Bitcoin a degree of individuality. Unfortunately, that seems to have flipped back to a certain extent. As I said, correlations are ever changing. Right now, we've moved downwards in the S&P. We've seen a move downwards on Bitcoin. It reasons that the same thing that led to the move downwards in the S&P led to the move downwards on Bitcoin, which means these charts are once again connected to a certain extent, which is not very good for Bitcoin because this chart doesn't look particularly good. In fact, what you will probably see here is something like a head and shoulders and then move downwards further. That's probably what you're looking at from a TA perspective, at least. So that's not very good. But I do want to end the video by talking about 4-year cycle theory, because you might be wondering, where does the 4-year cycle lie into all of this? Luckily for us, right, and it's not really helpful to us, but it is something that we need to talk about. The 4-year cycle is a date range trend. It is not based on price points. There's no specific price point that you can look at and say, okay, once this price point goes, that's the end. It's a date range trend. It's based on dates. So the only way the 4-year cycle could ever be disproven is if we drop below 15.4k. That's the only way we could ever lose the 4-year cycle. If we actually drop to new lows, that would lose the 4-year cycle. Until then, the 4-year cycle is more than valid. It's more than active. Because, look, we have not seen 3 data points from this point in the cycle before. We've only seen this point in the cycle on 2 occasions. 2 occasions is not maths. 2 occasions is not maths at all. So there's no trend formed in 2 occasions, right? 2 occasions is coincidence. In order to have a mathematical trend, you need to have 3 occurrences of data. Right now we are on the 3rd. We haven't seen 3, and therefore we have no indication, actually, from a cyclical perspective, of what Bitcoin should do at this point in the cycle. That's something I've said to you over and over again. We have no indication of what Bitcoin should be doing at this point in the cycle. We're in the dark here. We're in no man's land. I've used that term over and over again over the course of the last 6-7 months. So we're in no man's land for Bitcoin. Okay, and luckily for us, the 4-year cycle is very, very solid. The only thing that would invalidate the 4-year cycle is us going below 15.4k preemptively, okay? Which is like any time. Anytime we go below 15.4k, say this year, next year, that would invalidate the 4-year cycle theory because that would destroy the date range trend. The date range trend is based on tops and bottoms. The bottom was perfectly predicted to be in Q4 2022. If we see the bottom come in now, that's going to destroy the 4-year cycle. So luckily, the 4-year cycle is very resilient. The 4-year cycle is holding, but it doesn't really tell us much, right? Because 15.4k is a long way away. And obviously, if we're going to see downside price action and lurk near 15.4k for a year, that's not very good for us as investors or traders. So although the 4-year cycle is very solid, although the 4-year cycle is very strong, although macro, I'm still technically bullish because of the 4-year cycle until it's broken, it doesn't tell us much about what's going to happen next for Bitcoin. It just tells us that Bitcoin shouldn't drop below the lows, and the lows are very far away. They're not really even in our mind right now. We're thinking more about this price region at 24.5k. We're not thinking about 15k right now. We simply cannot do that. So, don't worry about the 4-year cycle at this point because it's very, very strong. It's very, very valid still. If that breaks down, we'll obviously speak about it, but that could be months away. Or it probably won't even happen, right? Here's the thing with 4-year cycle. You can't really say it's going to break down. You can't really say that Bitcoin's going to break the 4-year cycle because there's no TA evidence to suggest that because we've never seen it happen. It's never happened before. So it's one of those things. It's like for the same reason that I was saying that a downside drop was probably less likely in this region because we've never seen a drop within the Gaussian channel like this before, okay? And we haven't actually seen it confirmed yet. We still haven't closed below it. That's the same reason why you can't say the 4-year cycle will break. It's just, you have to understand that the common person thinks of TA very different to the trader or the investor. The investor and the trader trust the charts. They look at the charts. They look at the data. They don't care about what these random sentences mean. People who are saying, people will say this right now. I guarantee you on this video, they'll say, this has all been a bear market rally. Bitcoin, this whole thing's been a bear market rally. We're going down. You have to understand that sentence means nothing to a trader or investor because it's not based on any charting evidence whatsoever. We know it hasn't been a bear market rally because we've broken above major levels. We've seen a major macro uptrend. We've broken above 3 ranges from the bottom. We know for a fact that it hasn't been a bear market rally. What was a bear market rally is this move here. Okay, you could have said this was a bear market rally. If we went downwards from there, that was a bear market rally. Since we broke above the entire bear market price range, it was no longer a bear market rally at that point. Even if Bitcoin goes downwards below 15k now, this move was not a bear market rally. It's very important that people get their definitions correct because the difference between a trader and investor and between someone who doesn't really know anything about TA and just kind of says things because like recession, blah, 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 is they don't really know what they're talking about. They just kind of say things. I don't say things all of the things I say are based on charts. All of the opinions I have, everything I'm correct about, everything I'm wrong about is based on the actual data. I will be wrong sometimes because data is never 100% correct. That's just how it works, right? But you can rest assured by trusting this YouTube channel, watching this YouTube channel, I always give you the actual probabilities. I've always said during this entire range, Bitcoin was 25% likely to break down, and if it breaks down, it will be very quick and we'll retest this green box. That's exactly what we did. Right, so call me wrong about the move, sure, but the fact of the matter is, that's exactly what we did. The scenario I listed was exactly true, and I also said don't buy in this range. You got to understand that people who trust charts, traders like myself, investors like myself, are always going to be more informed and better prepared than people who just say random sentences. You have to remember as well, we've seen a 2x move on Bitcoin in just over 6-7 months. 2x moves in 6-7 months is not a bear market rally. That's a double in price valuation. We've never seen a bear market rally that big ever. So, look, here's what I'll end the video on. And I'll just say it like that. I'll just say it plain and clear. 4-year cycle is still valid. It's going to be valid for a long period of time. We'll know if it's broken. So 4-year cycle is out of the question. Don't worry about 4-year cycle. What we do need to worry about is the macro trends that are being destroyed, such as Gaussian channel trend, bull market support band trend. What we do need to worry about is the daily chart. We need to worry about mainly, though, and the monthly chart. We need to worry about mainly, will Bitcoin close the weekly candle, okay, above 27.8K, probably 28K to be safe. That is the pressing matter we face. 28K weekly candle is probably the thing we need to be doing right now on Bitcoin. That is the step to recover some of the things we've lost. We failed to do that. The downside thing is we need to hold 24.5K. If we lose 24.5K, we lose this range, we lose the green box. That's a double top. Then Bitcoin starts to look very bad, and we can start to actually discuss bear market kind of things. But until then, let's just remain vigilant. Let's just stay kind of on track here, stay logical. Guys, thank you for watching the video. I hope you enjoyed it. Crypto Academy 10-unit course. If you want to learn how to trade, how to analyze charts, how to look at indicators, market patterns, etc., you can do so by looking at the Crypto Academy's course. All the information is on the website. You can check it all out there. Our contact details are on the website as well. Obviously, during this period of time of a big market drop, we've seen massive volatility, and therefore the VIP group has absolutely excelled. So although it looks like everyone's losing money, the VIP group's actually made a bunch of money on multiple altcoin breakouts. If you're interested in VIP, we have a 79% win rate, which means we win 4 out of every 5 trades. It's very, very cheap for what you get. You can check out the pricing, the details, etc. in the information group in the description below. We've also got the VIP results in there. You can check out all of our trading results. So guys, thank you for watching the video. I hope you enjoyed it. Let's check back on the charts tomorrow. Cheers.